This video is to be used for educational purposes only and is not intended to replace individual research or licensed investment advice. Unique experiences and past performance does not guarantee future results. Trading stocks, options, and spot currencies involves substantial risk, and there's always the potential for loss. Your trading results may vary. No representations are being made that any software or training will guarantee profits or not result in losses from trading. This is the Premier Trade FOREX Report.
This is the FOREX Report on a Friday here on the James Dix Financial Network. I'm Jack Lott. Hey, we got off to a dull start this week with a thin economic calendar, but things quickly picked up. Traders jumped in on Tuesday, adding large amounts of short dollar trades. The greenback fell sharply in the broad market, losing as much as 150 points in some pairs. This sent the U.S. currency to new multi-decade lows against a few currencies and allowed the euro to reach yet another record high of nearly 1.38, a level that would be tested and broken later in the week. Dollar would remain weak through most of the sessions following Tuesday's sell-off, as traders grew increasingly concerned with U.S. housing and mortgage industries taking a toll on the overall U.S. economy. The yen even participated in the dollar's beating and held strong in the broad market. However, the Japanese currency could only hold its footing for a short period of time. It quickly came under pressure. The yen recovered a bit today, but it has yet to give any indications of major unraveling in carry trades. Some of this week's most important events included interest rate decisions from the Bank of Canada and the Bank of Japan. Traders went into both meetings nearly certain of those outcomes, making the accompanying statements the real event. The BOC hiked its rates as expected and maintained a hawkish bias. This helped keep the CAD well bid as it remains around a 30-year high against the greenback. The Bank of Japan held rates steady with a vote of 8-1. They sounded as though they may want to wait a bit longer before hiking their interest rates a bit. With market expectations of a 25 basis point hike in August, some traders believe the yen is vulnerable to even greater losses now. The only U.S. data was released in the final 2 days of trading, and including the monthly trade balance and retail sales. Yesterday's trade balance was right on target with expectations and failed to move the dollar. Today's retail sales data came in well below estimates, which called for a gain of 0.1% in the headline and 0.2% in the core reading. Actual figures minus 0.9% and a minus 0.4% sent the dollar spiraling lower again today. Final release of the week, Michigan confidence did give the dollar a small boost today. The index unexpectedly jumped to 92.4, but it was simply not enough to spark a big rally in the dollar. In the big picture, it has been a while since the dollar has been under such intense selling pressure in the broad market. Seems as though the perfect storm is brewing despite U.S. stocks making record highs. Currency traders are, of course, more concerned with the Federal Reserve not keeping up with interest rate hikes from most of its G7 counterparts. As the dollar loses its yield average over low-yielding currencies and falls further behind the high yielders, the bears are no longer willing to overlook the negative fundamentals. When the Fed was outpacing every other central bank in 2005, traders quickly swept U.S. deficits under the rug, and they bought dollars hand over fist. Those deficits have not disappeared, and it seems as though the case for a weak dollar is only getting stronger. We now have the health of the U.S. economy in jeopardy due to a housing recession, and most other major economies are simply shrugging off the slowdown in the U.S. Global economy is expected to continue growing steadily, even if the U.S. takes a bigger hit. We also can't forget that the recent G7 statements have all but encouraged a big decline in the U.S. currency, which will not help its chances of rebounding. Not to mention $73 per barrel for oil and increasing geopolitical tensions between the U.S. and a handful of other nations. The big picture really is getting darker for the buck, and some predict this is just the beginning. And that's the FOREX Report on this Friday. I'm Jack Lott. Have yourself a good weekend. This is the James Dix Financial Network.